the Warriors Consumer Pain Index Day. Who's ready to react? How you doing, Ingmar? Bran? Tighten up your stops. Hi, Mike. Came in. Welcome back. Good morning, Ryan, James, Marcus, Laura. So, Ryan, it looks like you against Jane on Sunday.
Yep. Good luck to us.
I've really enjoyed the soccer this summer. It's been a nice distraction from all the political.
Enjoyed it more than me.
Yeah, I know you sounded aggravated on your description. You ought to be out there. Anyway, you know.
Good luck with that as well.
Well, I bet you were good when you were younger.
I could kick a ball.
Yeah, you look like a soccer player. So anyway, we have Euro acting good. Are we going to get a hot number and take it back down? My next breakout level is right here, about 108.80. You know, this line down here was the first sign. So I have a couple more. And hi, everyone, Eric Barnes. What does a soccer player look like?
Not like me.
Someone who, got hit in the face with the ball 1,000 times. How about that? Hey, George. Anyway, okay. So here's the daily. So there's two barriers. Those are the lines. So I don't think we're going here anymore. We'll see what happens here in this line. You need a weekly to look at. So coming in at 110. So it looks like, 108.50, then 110, and then I can't find a downtrend line. The next thing would be the 200 week. But, doesn't look bad, but in a New York minute, everything could change if we get a real hot number. Also talked about the pound challenging the 200 week. We're getting through it. I don't know why Canada has to be up today with the dollar a little weaker. And the same story with the dollar, right? We broke one trend line, just like Euro. Well, it's almost the same thing. Broke one trend line last week, and we'll be challenging the one from the end of last year here, anchored before the end of the year. And, everyone knows my philosophy on trend lines. It's the trend lines have a destiny to be broken. So let's see what happens here. A benign number, and I think the dollar breaks down today. So coin toss day. What are you doing, Ryan?
What am I doing? I think I would favour selling a dollar rally.
Okay.
That would be just because that's the way things have been moving for the last few days and weeks. So, there's no reason for that trend to change. But then again, if CPI stays above 3%, isn't as soft as expected, that'll be 11 months. That'll be nearly 13 months, I think, or will be 13 months, where CPI hasn't gone below 3%. And that's sticky. And maybe we see a bit of dollar strength that lasts, maybe a couple of sessions, couple of days or something. Well, till the next data point.
Okay, so that scenario would be, kind of like, we hold here in the trend line and bounce one more time. Yeah. If we don't, this was a very feeble rally. Feeble, right? And, this was a level if you look left. So we'll see. I thought, before today that we'd get like an A, B, C back towards resistance. We'll see. The S&Ps are crashing. They're down 4 handles with the momentum over 80.
Fast market.
I know Blake made a melt-up tape. Targets for the high of the melt-up, Blake Morrow.
I mean, your guess is better than mine. I mean, the first level would be 6,000. Next would be 8, and after that would be 10,000. So,
Okay. Well, this says
I'm joking,
this says
obviously.
6. this says 6. I mean, always has. So if you call, the end of 22, and that was a breakout at 4,800, you go down to, 34. You tack on 14 at 61, 6,200 there.
Yeah. Well, here's the thing about like a melt up and, blow off top that we're currently in. And this is one of the comments from one of the traders in our chat room of many years. His name is PM. He's like, we're currently in the middle of the blow off top, and who knows how far it'll go. And that's a correct statement. If stepping in front of the market right now is like stepping in front of a moving vehicle, and you just let it play out, and how far it goes, I don't know. But what I've always and I've only seen a blow off top maybe
2000.
Well, no, did you say 2000?
Yeah.
No, that was just kind of like the market just kind of rolled over. But blow off tops are like, when crude spiked into 150, or the dollar-CAD went into like, what is it, 80 some cents. It was a, complete blow off top of the Canadian dollar. I mean, you've only seen a few moves. I've only witnessed a few over the course of the last, 25, 30 years or whatever. And they're very aggressive. So what I mean by aggressive is, you would see maybe US equity markets up 3, 4, 5% intraday, and then give it all back by the end of the day. And then
why not wait for a day like Nvidia had, even though it's going to try and negate it, but why not just wait for a key after a
I mean, and
then go with it.
Yeah, that's the thing. And I mean,
then you don't have to know where the top is. You let the market tell you, right?
Yeah, exactly. It closing at all-time highs yesterday is not bearish. I mean, maybe we get some sort of tweezer top, or bearish engulfing candle today, maybe. But until you see it, you gotta let it play out. So,
I wanted to, I talked to a lot of people in the precious metal type people, and even the ones, and I bring them in here like James Henry Anderson. So even the guys that are big precious metal bulls have been leery of the miners. And I'll tell you something. You know why the gold was down $34 on Monday? I didn't know until I talked to Adam. Told me yesterday. China said for the second month in a row they weren't going to buy. So, are they saying this so they could, get a nice dip to buy? I mean, both of those announcements had very little follow through. So I don't know. Are the Chinese transparent?
Morning, Dale.
Hey, Kay, what do you think?
3 days in a row, Asia has been buying gold. I don't have to say more.
All right. So they use that misdirection in the market.
Every Asian session since Tuesday has been bought in gold. We correct lower during our day, during the US session, and you walk in the morning and it's $10 higher.
That's a great insight. And look how many times, Kay, tested the breakout again yesterday. So I thought we were going to test the breakout, take it out, but that doesn't look to be the case.
No, well, I mean,
three chances there.
If it will, when it will, or if it will, then it's probably time to get out. But and look at what the Asian session is doing. If they don't buy anymore, perhaps we're correcting lower if the dollar is regaining some. But that's 3 sessions now in a row. We now wake up and it's $10 higher than where we left it. So I think they at least partially are back on the train.
And if the dollar breaks down, go ahead, Ryan.
Sorry, mate. I was just saying, Gavin put an interesting article in the newsroom that Uganda has now joined a list of African nations deciding that they're going to buy gold.
That's more worrying than anything else. If we see,
maybe, yeah,
that's a fade.
remember when what was it? That country that was buying Bitcoin at the highest 4 months.
Oh, they're still a Bitcoin country. I think it's a lot of people went down to Max Kaiser. I think it's Nicaragua that's going to be a Bitcoin economy.
No, but anyway, I mean, it's something that I keep an eye on, and especially because of those articles saying that they haven't bought for 1 month, they haven't bought for another month. Yeah. And then was holding around 23. Now it's holding 23.5. And yeah, I'm just a bit long and wait for that level to break back down, which will be harmless if it does. But if they continue to buy, and if we get like it won't have to miss much today, I think, on the CPI for it to test the 2400 again. But we will see.
Yeah, and if the dollar breaks down, that can hurt the cause of higher commodity prices. Shouldn't, right?
No, shouldn't.
Yeah. How you doing, bro?
The issue now with that CPI is that a lot of people are already watching the second and third decimal. It might end up being an absolute non-event if we come out as expected. Yeah, I mean, we were talking about it on the Flow Show as well. I think Ryan is right. Get a 2-handle and things will start to move. Stick above 3, then back to the drawing board, and we will see what happens.
Okay. You know, I just for the halibut, that's what I fish for. I don't fish. I open, you know, I go to the grocery store. Anyway, wanted to show like the monthlies, like the gold, the monthly, like, you know, it's pretty obvious, right? Big breakout at 21, you know, a nice looking month so far after moving sideways. We'll see. It looks like we'll see how this month closes. But you look at that, that's clearly bullish, right? You look at silver, and
yeah, it is, and I think that's where the distinction has to be made between the miners and actually gold. I don't think if you look at Asians that they bother buying miners, they just buy the metal, right?
Yeah, but you know, I keep hearing this negative argument, and when gold was down $34 that day, the miners barely gave up a quarter point. Okay, so there's Newmont at new highs, and you know, there's it reminded me of the oils. Remember, we had an oil peak, and crude was going down, but money flows into oil shares. They ended up looking like two different markets because, like gold, if they have a floor of 2100, you know, they're printing money right now. So it's the opposite of how it's been for a few years, where the gold would begin to outperform. I keep waiting for a break to buy these miners.
I knew you were going to say it.
But they're not accommodating me. I mean, we've had, you know, less than not even a 50% pullback with all the breaks we've had in gold. They're beginning to outperform. That's what I'm saying. Okay.
Wouldn't that be very bullish then, gold?
Yeah, well, it's very bullish.
If both of them get bought?
It's very bullish. Yeah, the miners are supposed to lead, and that's what they're doing now. You know, silver had some pretty nice pullbacks, but you know, ETFs are on the verge of making new highs, and there are some juniors that I talked about earlier. I sold this $2 ago. Okay, Endeavor Silver from 150 to 450. It's a triple. And look at the day. So, you know, you have to differentiate, because look at that, and then you look at this, and it doesn't look as good. And this is kind of a blue chip. So, you know, just like anything else, you have to be in the right stock, even when you are convicted about a sector. So, well, anyway.
All right. Well, Dale, let's dig into some of these currencies and setups ahead of CPI, because it might be a dud, as K-Man and Ryan are saying, if we don't see a 2-handle, but we really should nail down some of these pairs.
Go ahead, bro.
If I take the charts?
No, I was rambling.
All right. Well, let's get in. What's that? Buy miners. Okay, that's what pullback,
if they even give it to you.
All right. Well, you know, the euro, you guys can see the euro is clearly, you know, trying to make a move here, and I believe this is really going to be a critical development going into today. You can see the euro just on that trend line. I mean, it is really threatening a breakout. So, you know, we're itching basically for a weak US dollar or a weak CPI print. I mean, if we do get it, let's say, you know, if you look at the data flash, I'll just pull this down really quick. This is the number everybody's looking at. CPI forecast, you know, at 3.1. You know, everybody's hoping for a 2.9 or maybe a 3. If we come in below the forecast right there, that might be the catalyst that pushes that dollar, you know, higher. And then that would, you know, going back to what Dale and K-Man were saying, we're just talking about, that's going to put gold probably a lot higher as well. But that's what everybody's looking at. And if you look at the dollar index, you know, you have this big, huge triangle, which is in dots here. You can see it dotted, right? We're flirting with this trend line. That's the same one as the euro. It's just opposite since this is the dollar index. But you can also see it's the 618 retracement too on the dollar. So if you take the low from June and you take the high from June here, you've got, well, I guess, is that all of June? Maybe, yeah, it is all of June. So you take the June range, it's the 618. We're probing it right now. So you can see how important, you know, all of this is for the dollar. That's going to matter with, you know, you got sterling. Sterling's breaking out today. The UK data, what'd you make of it? I mean, we had a bunch of data come out, Ryan, but the GDP came in stronger than expected, right?
Yeah, came in higher than expected. A lot of that probably down to the bank holidays we had in May, coronation and all that sort of palaver. But good numbers is good numbers. The more important number was that 3-month rolling, which came in at 0.9%. That covers 2 months of the second quarter. So it looks like Q2 is heading towards a positive outcome.
Well, I mean, and sterling is continuing to rally here, and we're threatening, you know, this 129 level. We break above that, then you're talking 130, 131. I think some analysis this morning that you guys put out on ForexAnalytix. Let's go back and read it really quick from, you know, earlier. As you guys pointed out here, we're seeing some pretty strong moves, and we are looking into 130, right? So yeah. really key developments, I think, in pound, right?
Yeah, very much so. That's why I think buying dollar dips is the way forward.
Okay, and so buying dollar dips is what you're thinking about.
Sorry, selling dollar rallies, buying the pound on dip, buying cable.
Okay, buying sterling on dips. All right, sounds good. Now the Aussie is also wedging up here into highs. I know we just posted some analysis on the Aussie, but this is still in breakout territory. K-Man, how are you looking at the Aussie right now? Are you bullish? You constructive?
I'm a tad long, but nothing really large. Just because it's holding, and I think 67 is a decent level. But I don't know. The antipodians are slowing down, and I'm not sure whether it's the best expression versus dollar. At least not short dollars. It may be a bit of a surprise if we get a higher CPI on those, because they are both slowing down. We've seen the Kiwi as well is slowing down, and short-end yields are coming off a little in continuation after the RBNZ, which is a bit strange in my opinion. Yeah, so I'm not sure whether those are the best ones. But yeah, if the CPI misses, I think we trade 68 on the Aussie, and it's in line with the rest of the dollars, I think. If we get a real big miss, because that's going to have the market comforted in its idea that the Fed is walking, as I said, a tighter reach than what the dots are saying, at least, and Powell already said as much. So yeah, I'd get a weak CPI. The market continues to sell dollars, 68 on the Aussie probably. And then we reassess around 68, what is it, 10.20 or so. And yeah, that's about it for the Aussie.
Got it. And, you know, Ryan, I still love the Dollar-CAD. I mean, I love Canadian. This was I did the trade-off with Chris Weston last night. This was my play of the day. And I think everybody here knows that, you know, that CFTC positioning is so skewed for Canadian longs, meaning Canadian dollar shorts, meaning everybody's thinking that we're going to 140. It's the most in history that I think we've seen. I had the chart with me. I don't have it right now up, but anyway, you can see this really big confluence of the 136, 135.90, the 200 DMA. If we have some weak data and the Dollar-CAD breaches those levels, I think it's a quick elevator ride down. Now, I believe, and Ryan, you might want to jump in here in a second. I do think that if the dollar Canadian breaks down like this, it is a buy. Because I am more of a Canadian economy bear. I'd like to play into the Canadian on the short side on any rally overall over the course of the next several months. But I think that we could see a nice move lower first before rally. What are your thoughts here on the Canadian?
Yeah, I think that level 136, 135, 85 is a big level. There's going to be some blow through if it breaks just from stops or whatever. The question will be whether it holds below. I've just chucked out the rest of my Dollar-CAD short because I was in at 136.22. I'm not happy. It's a bit in no man's land. I took a bit off yesterday at 09, but I'm not happy being short here. So I've got stops running below that support. So if it does break, I think it's a quick trip initially to 135 and then see what it does from that point. Otherwise, if we get a bounce again, if it's half decent, mid 137s, high 137s, I'll look to get short again. Yeah,
and K-Man, do you have any thoughts here on the Canadian? I mean, anything you're looking to do?
I'm always a bit skeptical about trading Canadian dollar because it's probably, well, I think at least it's not the best expression of a dollar pair right now because of its proximity too close to the US. But as Ryan was saying, it's technically ideal. If you get a break under 135.90 figure, it's probably going to go. That is for sure. But is it your best dollar? I don't know. I really, no, it's not the one that I prefer, but I am like everybody looking at that 135.90 figure. Obviously.
All right. Well, let's talk about the US dollar CNH because this is a big deal. I mean, as far as I'm, like technically, and I don't trade the US dollar CNH, but I don't know if you guys can see this, but it is a head and shoulder pattern. So that's what this is right here, right now. And, what's driving this, Ryan? I know you've got a lot of focus on the US dollar CNH. So what's driving this move right now?
There's not really much from China. There's been a bit of news. We've got this plenum coming up, and Z might be wielding a big stick, but that could mean big fiscal measures, which is obviously negative for the yuan. You see it weakening, but if the market takes it as positive moves to get the economy going again, then you could see some strength. But I think this is more just a bit of a dollar move at the moment. I've got a couple of bids in 27.5, 27, just to test this support area here. That was the break point for a long. So we'll see. What happens
so you're going to try to pick some up, even if the data is weak and you see a little push below there. You're going to try to buy some.
Yeah.
Ooh, man. All right. Okay. All right. Well, go ahead.
Bulls, right?
Yeah. I was going to
say. I think that it's probably, and I don't disagree with that because it's probably the dollar which is maybe affected the least because of what China is still doing, and this could be the one that all of a sudden finds a bit if the CPI weakens, if the CPI gets a bit sticky. And there's $2 that I'm looking at, if I may. $2 that I'm looking at is if we get a stickier number is dollar CNH and dollar Swiss. Dollar Swiss, if that goes back above 90.25, I think we can do a next leg higher. But now we are in a downward channel, which is undeniable. But this is one that I'm keeping an eye on. If we get real sticky numbers, okay, not 0.1 or so, but real sticky numbers.
Right. Okay. That in the US dollar, Swiss franc, this would be, I mean, this is like something that would you also complement that with maybe like the Euro Swiss too?
Yeah, or something like sterling Swiss, or you know, and it depends how the rest reacts. But I've got like a tiny bit of Kiwi Swiss, but I'm not sure whether that's the right one to have. And I'm just looking at a couple of possibilities. Yeah. Still not a
Okay,
huge fan of the euro myself, but yeah.
got it. Okay, well, let's
It's
real
bounce
quick.
back ability. That's what you got to be looking for. If you feel the dollar is going to be weaker over time, and you get something that's hot for the dollar today, you got to look at the pairs that are going to have the biggest chance of bouncing back. Aussies one, cables one. You know, that's what you look at, bounce back ability.
All right. Let's talk about this equity market just before we run over to you know, cover this all live. Equities. I put together a video, and Dale, you probably saw it. It was the, you know, it's the anatomy of a yeah, thank you. It's the anatomy of a blow off top. And you know, when you get up towards channel resistance, just like we were here, you've got to be looking at it. But notice how the acceleration and you know, the steepness of this curve is just picking up. I mean, we are literally going parabolic in the stock market. Parabolic is just, you know, just take any object, grab a tennis ball and throw it up in the air as hard as you can. You know, you get this, you know, parabolic move, and it can't sustain. Gravity will eventually pull it down. And that's, I don't know where gravity is going to take hold, but we are in the midst of that ball really, you know, taking off into the atmosphere, right? You can see how the acceleration is taking place. This is the risk. I mean, yeah, can we still go higher? Can we go to 6,000? Can we go to 6,500? Possibly, because we don't know where it's gonna lose steam. But the thing I want to ask you guys, and let's start with Ryan. What would accelerate the markets today? Do you think, because this is a debate that we had with the ForexAnalytix traders yesterday on the daily roundup show, which is one of our private shows in the ForexAnalytix community. What do you think would drive the stock market higher today? Weak data or strong data, or both?
Yeah, lower inflation. That's what's been driving it higher. Well, sort of driving it higher all the way through. But you know, you could. I know you're a big fan of these blow off tops. It's been blowing off tops for the last 15 years. So and it still hasn't come down. So
yeah, right. It hasn't, you know. You can't. It's undeniable that the acceleration is going right.
We had that back. We had that late 2023. Look at that, from, you know, just after September, where we made that low around what is it, 41ish. No, right there.
Yeah.
You know, look how parabolic that was.
Yeah, right here.
It's still parabolic.
Yeah,
on a good jobs report, by the way.
What's that?
On a good jobs report, by the way. That was the day we printed the low, and then we completely turned around.
Yeah, and look, I'll be the first one to admit we haven't seen an intraday reversal at all. We've seen price action reversals. I mean, this is price. I mean, this is like, yeah, we got a head and shoulder pattern, it played out, and then we reversed.
That's healthy. Yeah,
we haven't seen an explosive blow off top. We haven't seen one yet. I mean, we're at risk of one, and it's kind of like when a chart pattern sets up, you have to be there for the setup, right? It's like, even though we haven't seen any blow off top, we're currently just rallying, but the risks are there. But I'm going to ask you guys this, and then I'm going to set this up while we're doing it. You know, can the market rally on higher inflation? You know, if we have a CPI data that comes in, let's say a little stickier, do you think the stock market can go up on that? I think it can. The reason why is because there's so many people that are in the belief that stocks won't go down until there's a rate cut. So if there's no rate cut coming, then maybe we won't get it. What are you guys' thoughts on that as I set up this?
I don't know. On the day we may correct a little bit if the market really reprices the rate cuts, but I'm not sure it will reprice rates that much on today's data unless it comes out far from expectation. But if it's very hot, we may see a setback on yeah.
All right. Well, you know, we got about, oh, here we go. S&P on the left, dollar index on the middle, and CPI. What must be weak? Oh wow, three handle. Wow. Well, there we go. Dollar is getting smashed. Holy cow, there it is.
Still above 3% though, still on 3%. So it's softer than expected, and the core's down a pip as well. But it's got a 3 handle on it still. But dollar's going to go where dollar's going to go.
There go yields. Dollar, not so much.
Yeah, the 2s are dropping below 460. The 10s are on the 420 handle.
That's the important level. 420 closes, opens the
Gold
door.
is nearing 2400.
And by the way, this move in yields is a big deal, guys. We are going to see that this 10-year breaking out is a big deal. You won't see it in the 10-year right there, but you'll see this. Oh, gosh, dang, let's go over to the charts here. Look at the S&P, nice rally there. Let's see if we can get up even more than we're at. But look at this 10-year. This is a big move, Dale.
Bang on it as well. Dollar-CAD's bang on it.
Yeah, we hit that 135.90. Do you think we're going to break here?
It's possible. It's got legs. It's struggling at the moment. You know, I keep saying it. What we're dealing with here is a calendar. It's like BOE's Pill said yesterday. The thing about rates is not if, but when. I mean, it's still but when. So is it September? That's what we're repricing now. Market's probably going, oh yeah, we'll up pricing for September. But you know, this isn't, oh, the Fed's just going to start cutting. We knew they're going to start cutting. It's just a question of when. So I'll be breaking the yields. It needs to hold below 420 now. If it doesn't, if you know, a couple of minutes we're back above it, then we've seen the end of it probably.
So the market didn't care what the Fed said the other day. The market is running the Fed.
Right. I just sold some more Dollar-CAD. Just sold Dollar-CAD. I got filled above 136.
Thank you, Lord. Close under 136. I've been waiting 60 days.
Well, it's all right. It's all right sometimes to be a little early. Let's see if we can close below that 200 DMA. That's going to be a big one.
It's an add-on. It's an add-on if you're short, right? Another signal.
Yeah. It is. It's like if you can sustain these lows. I mean, look at the dollar just getting wrecked, and look at the stock market just ripping into new highs. And I mean, we're at channel resistance. Again. Let's see if we can break out. And the 161% extension on a monthly basis and a weekly basis. I mean, that is right there. The December 2021 highs to October 2022 lows. We are at the 161% extension. If we break above 5,700, we should see 6,000 pretty fast. So,
and the end's getting clobbered.
Yeah, I mean,
2,400 in the gold.
We're still above 160. So yeah.
Yeah, that's
so here we are. The levels are getting tested. 2,400 is getting tested in gold. Can it break? Can it not? This is where you need to make the decision.
And this is when we bring Mark Chandler on to talk.
Yeah, let's get some thoughts from Mr. Chandler, Mr. Mark. You know, before we go, I just want to say I'm glad everybody was here. Thank you all for being here with us. Make sure that you guys take advantage of this month. I'm actually going to be meeting. Well, I'm meeting with somebody tomorrow regarding the trader funding program. If you take the trader funding program in the month of July, you'll get a one-on-one consultation with me. We'll be talking through the you know, kind of the assessment process and maybe some tips and tricks that might help you you know, pass an assessment so you can trade larger amounts of capital. So make sure you take advantage of that, and make sure you jump in the ForexAnalytix community. We're going to be diving through all of this and more. And it's only $1 for 10 days to try it out, and then you can jump in the community with us. I'll be on the morning edge in 40 minutes from now. So thank you, K-Man. Thank you, Ryan. And you know, and welcome Mark Chandler, and thank you, Dale. Appreciate you guys.
Okay, Blake. Thanks, team.
Cheers, mate.
So, Mark, great to have you back here on F.A.C.E. How have you been?
Doing all right, though. Tell you the truth, I just got tested positive for COVID, a mild case. It's only the third time I've had it, so what can we do?
Wow. Yeah. I hope the symptoms are mild for you.
Sure.
Or asymptomatic be better, wouldn't
yeah,
it?
the working from home is good, and it gives me time to stay focused on what's going on.
Okay, so I want to start here before we get to the general market. So Blake brought to the table here in F.A.C.E about your Aussie Kiwi long. All right. So what I'd be interested in is your thought process, the anatomy of it, what you were thinking fundamentally, or was it more technically driven? But it's been a huge trademark. Congratulations on that. What did you see? Did you see a divergence coming in central bank policy between New Zealand and Australia?
Yeah, Dale, for me, I know that you guys talk about technicals and fundamentals. I don't know really how to separate them. I know, early in our
Okay.
careers, there's a big battle between the two approaches. But for people who are involved in the markets, I really don't know how to decouple them. I saw positive technical formation. It looked to me like the Kiwi had strengthened sharply earlier this spring against the Aussie. That had looked like it had bottomed. And then I was looking at the market. It wasn't taking seriously the RBA's hawkish rhetoric. And while at the same time, I saw them doubting the hawkish New Zealand rhetoric, which they reversed this week. And so I think it's a combination of the technicals giving me a low risk opportunity to enter and catching the right move on the divergence of the central banks. I've raised my stop now to I'm in from below 109, and I've raised my stop now to 110.60, I think.
Okay, so was this a pullback range at so this is a great example that you didn't have to buy the bottom to participate in a real nice move. You didn't have to be a hero and make the tough money, because you'd be so grinded out.
I'm no hero. I mean, I had to wait for it to bottom to have some confidence that I wasn't just trying to catch a falling knife.
Right. Yeah. I have some scars.
Yeah, I have four fingers on each hand.
All right, Mark. So let's talk about the dollar in general. Here's my look. I have it, broke a shorter term trend line last week. And on the number today, it's trying to break down. Cable is pushing through major areas right now. Here's the weekly. So it knocked at the door of the 200 week. All right. Aussie's been acting respectable, never gave anything back. That was part of your successful trade. Canada is threatening a breakdown at 36. Is this a dollar story? Or because there's great action in different currencies that aren't related to each other in any way?
Yeah,
but more of a dollar theme?
I had approached it coming into this week as a dollar move, but
Okay.
I tell you, I have three concerns here. Even though I saw this softer than expected CPI, I saw the dollar come off. I've seen what's happening. Sterling's at new highs for the year, I think. But here's my challenge. I think with being too bullish on the dollar right now, even though I know everybody's excited about this breakout and the soft CPI. First, the market is already pricing in 2 Fed rate cuts this year. It's hard to imagine a third one, partly given the schedule, given how many meetings are left, 3 meetings after this month's. And I think after Powell spoke this week, there's no way that the Fed can cut rates at this month's meeting. So that really gives us 3 meetings in the end of the year, 2 rate hikes priced in. Hard to see the third one. Secondly, I think that the intraday momentum indicators were already stretched before we had the CPI report. And thirdly, one of the things I look at for the dollar index and for the euro is the 2-year US-German interest rate differential. We have come down over 25 basis points, and we are holding support at around 170. That is, the US 2-year yield is about 170 basis points on top of Germany. We haven't been below there for over 3 or 4 months now. That's a solid support, and I'd imagine to hold even after today's CPI report. I think the CPI was softer than expected, but here's what it looks like to me. The Fed will have more confidence, but the market was already pricing it in. If you look at the today's number on a 3-month annualized basis, you're looking at a 0.8% CPI for Q2, and that comes after a 4.4% CPI in Q1, annualized rates. I think that's how the Fed or Fed officials look at it. So my thinking is that this has already been largely discounted by the markets.
Okay.
We rallied mostly before the number. We had another leg up as the as people reacted to the headline number. But I'd be more interested in selling the dollar, waiting for the dollar to.
You want to buy this dollar weakness here pretty soon.
Yes, but I think that this move today, move this week is a little bit far. I'm looking for a pullback in the foreign currencies before I think it's clear to buy again.
Okay. All right.
And maybe I could quickly add about you guys are showing a picture of the a chart of the CNH, and I've been following that closely. It looks to me like there's a head and shoulders top in it, which really to me is part of my story. It's not about the Chinese. We have this. I think that in the West we have a lot of like a narrative about how evil China is, and I don't want to get into the politics of it, but I don't see them using the currency to boost their exports. I think the currency is kind of passive. That is, if you tell me what the yen is doing, I have a very good idea what China is doing. And I see dollar yen breaking down. Of course, it's holding 160, but it looks to me like in CNH, you've got a head and shoulders pattern there. And though I don't see it on the chart you're showing now, maybe it's just
this is the CNH. It's a weekly. You want something shorter term?
Maybe just show up a daily. I think you could see it a little bit on the weekly, but it's really more clear on the daily. But it seems to me like there's a head and shoulders top here, and we're going through the neckline now. Call it 728.
Okay. You're calling this little formation here the head and shoulders? Okay.
Yeah, I think so.
All right. Okay. So I was looking for something larger, but yeah, in the end, selling off too. You looking for more downside here?
Yeah, I think so. I think the market has got caught off guard by, we've got it. To me, the yen is largely explainable not by the U.S. 10-year interest rate differential with Japan, but just the U.S. Treasuries. You tell me U.S. 10-year yields are down 10 basis points now, and I'd say dollar yen is going to be lower.
Look at that. I mean, we're breaking hard. In the end, a lot of people were counting on the 60-20 level mark holding, which it did last week. But I mean, this looks significant here.
We're through that, and we're through 160 right now. I think
a lot of people thought we'd even trade 164. I don't know. Maybe we will, but nice divergence up here. Yeah. I think this is a big negative dollar day. So here's a dollar mark. Where do you want to be a buyer? Around 103?
I think so. I think that's a reasonable level. But again, I mean, for me, in the big picture, the dollar's turning. This is a big.
It is.
We have up here the dollar index. This is a big topping pattern forming, I think.
We're going under 100.
I think so. I think this is it for the dollar. I think that we're going to have a lot of people, including myself, have been looking for the dollar to turn. And after being disappointed several times, with the Fed seeming now set to cut rates once or twice, my bias is twice this year, I think the dollar is turning over. The key, like we saw in Q4 last year and Q1 this year, is U.S. interest rates. When U.S. interest rates fell in Q4, everybody got excited about the Fed's pivot, about the Fed was saying 3 cuts. The market was pricing in more than 6. The dollar fell, even though global interest rates fell. The key is U.S. interest rates. And the same thing now. The key is U.S. interest rates. And what I'm talking about in the short term is just that the dollar is a bit overextended on the downside. Okay. So I'd be looking for a bounce of the dollar to sell.
Counter trend scalp is what you're looking for at this stage. Do you, I've been talking about this 420 level, been constructive, treasuries. And to me, this is a major breakdown. 2 lower highs and 420, 470 gives us 350. Is that 2 cuts or more? That's a measured move.
Yeah, I think that'd be more. I mean, but remember that once the Fed begins cutting, and this is what we saw in the dot plot as well. The Fed says they're going to cut rates once this year. The market says twice. But the Fed says they're going to cut rates at least 3 times next year. This is the beginning of the monetary easing cycle. And so do
you think they're late, Mark?
I don't know.
I've talked to people that think that, you know, they already waited too long. They should have been doing this 6 months ago. The S&Ps would say something else, but they're not begging for a rate cut.
Yeah, you know, Dale, there seems to be a cottage industry that no matter what the Fed does, it's wrong. Central banks are wrong by definition. I think that when we're in that position of
I'm
having
in that cottage.
Yeah, I mean, me too often, but I think that you know, I think that the problem is that it's not just an absolute, is the Fed early. Here's the problem. The Fed has to respond not to the economy today because of the lag of monetary policy, but where they think the economy is going to be 3 or 6 months from now. And this business cycle has been very unusual, to say the least.
I give that to you. Yes.
You know, and so I think that the Fed was maybe late to begin tightening. Are they late to begin easing? Well, I think, you know, I saw this cartoon about a guy jumping off the top of a building. And when he's past the 70th floor, he says, everything's still okay. He's past the 50th floor, everything's still okay. This is the soft landing. The soft landing is that brief period of time between the end of the business cycle and a recession. We are in that soft landing that I think is morphing into a recession. Whether the recession comes early next year, late next year, I think it's going to be happening.
Okay, I want to ask you about something since you brought up the recession, because you know this I learned from you, Mark, in a previous interview, and I talk about it. Also, tell the people who mentioned it to me, and I say, you know, Mark Chandler says that every modern day recession started with an oil shock. Okay. And I've been watching WTI. I won't short it, even though, you know, there are a lot of bearish counts and so forth on it. But, you know, we're in this range. And I know maybe I'm being conspiratorial, but, you know, we held 80. We've been in this range for a long time. Wouldn't be the last nail in the coffin be that the bears are wrong and we're headed up towards 100 or higher this summer to really put the kibosh on the consumer who's already going to be paying huge utility bills this summer?
Yeah,
would that do it? Would that be enough of a shock? With everything else, you don't need $200 oil, but just getting it back over 100 would have impact on the consumer.
Yeah, I suspect that if oil were to say get much above $90, that the U.S. government would open up its strategic reserves again. And
they have some left. What they have left.
And here's the other thing too, that why I'm a little bit more positive on oil in the short run. Just this week, OPEC reported that its June output was an 11-month low, and the Saudi exports were its lowest level in more than a decade.
Wow.
And so I'm concerned about not the demand side, because I think weak U.S., weak Europe, weak Japan economy, and weak China is really is of course negative for oil. But I'm looking at the supply side, and I think that's tightened faster. I'm not sure. I follow oil, like you say, but to me, the shock, the cake is already baked as far as the end of the U.S. business cycle. And we're seeing weak numbers in Europe, especially those industrial production numbers. Germany was supposed to be up like a couple tenths of a percent. It was down over 2%. France was down over 3%. That's just in a 1 month move. And so I am concerned global economy turning over, not just the U.S.
Okay, that's interesting. And you look at what, you know, people have said to me, Mark, because I've been bearish a dollar for a while looking for this. And they would say, well, Dale, how can you be bullish something like the pound with all their political instability, with those big elections coming, or with the euro, with France having a major shakeup and calling those last 2 elections? And I say that there isn't a country on the planet that has more political instability than the U.S. I mean, they executed their elections fine. There wasn't calls from the people that it was fraudulent or it was rigged or Russia was intervening in it. So maybe part of what's happening here in the dollar is more than about interest rate differentials. It could be about confidence. Do you see any of that in this move?
Well, I do think that sterling is acting like a champ. I mean, I think that the UK is almost like a bit of a safe haven.
Okay.
The French politics, we did see, of course, the euro sell off when the Macron announced that snap election. But you look at the 10-year French bonds, and the premium has narrowed over Germany. I think that what's going to emerge in France is some kind of center left government. The first initial challenge, I should say, is getting a prime minister that can win a majority of the National Assembly. And then the second challenge, of course, is fiscal policy, with the EU already citing them as an excessive deficit. And you've got, I think it was just yesterday or so, a Moody's warning of a possible cut in their outlook from stable to negative. But all that aside, or even taking that all into account, I think that, you've got the euro here at 109. You've got sterling at new highs of the year, testing the 130 level or approaching 130 level. And so I think
they all
that
look good.
they
Everything looks
look
good against the dollar.
Yeah, like I say, I mean, and you see what's happening since we've been talking.
Yeah.
Not only did dollar yen go through 160, but we're through 159 and down to 158 and a half. The move is accelerated here.
I'm telling you that the
guys,
the markets wait for you and I to talk. Go ahead.
Sorry, I hate to interrupt, and it does feel, and we were just chatting about it, guys. And good morning, Mark. Good to see you, and I hope you feel better soon. But we were just talking about how it might be some BOJ, Ministry of Finance intervention going on right now too.
Why not?
It could be. I mean, this is, I think, for me, I thought that there was a risk of intervention if the dollar didn't perform properly. That is, if the dollar didn't react to the fundamentals, soft CPI should be a weaker dollar. I thought the BOJ would be prepared to intervene if that was the case. I'd be surprised, though, if the BOJ was in. It could be. I'd be a bit surprised because markets are reacting fundamentally like the way they should. Lower U.S. interest rates, stronger yen, and also the time zone. It's a bit tricky for the Japanese to intervene during U.S. hours.
Maybe the Fed's doing it for them.
Still, I would say unlikely, but it's possible. I won't rule that out yet, but I think this is oftentimes, I think the market does it to themselves and then blame officials for it.
Well, the Chinese said they stopped buying gold for 2 months, and every announcement was bought. And you know who bought it?
Well, no, it's funny that you say that, Dale. What I'm looking at is a host of other foreign central banks buying gold. In Europe, Czech and Poland. Just this morning, Uganda announced a gold buying program. I think
our guy thinks that's a fade when Uganda finally gets on board.
I think what's happened is that since the U.S. and Europe froze Russian assets, I think this was I think this was a big signal to foreign central banks.
Yeah. So so the milkshake theory, and you know that one, right, Mark?
Sure.
That's how the dollar goes to 140. The milkshake theory is going to evaporate under the sun of de-dollarization.
Yeah. So just to get to that idea, right? Is the idea is with the milkshake theory, right? Is that foreign companies, foreign countries have borrowed dollars because it's cheaper than often borrowing in their own currency. And so when the dollar goes up in value against their currencies, they have to chase it higher.
Yeah.
And this is not just a case of the depth of the U.S. Treasury market. This is beyond the U.S. Treasury market. This is sort of structurally global finance, the rise of the offshore dollar market, if you will. Right. And when people, so I think this de-dollarization is just really a wish. I think that there's really no evidence of it taking place on any substantial aspect, except, of course, China and Russia together.
Yeah, and whoever they're, part of their group, and more countries are starting to sign up with them, aren't they?
I don't really know about more countries signing up with them as far as trading in local currency. I think, of course, I'll tell you what really keeps me up these days. I just read a report that said that China was working with Belarus in Central
Yeah.
Europe on the Polish border to have military exercises. At the same time, Japan, Germany, and Spain are having military exercises in the Pacific. And this is, of course, like on the eve or on the afterwards of the NATO meeting. This to me is the real challenge. The Chinese manipulating the currency or limiting the movement, or what they've done this week, starting today actually, is making it harder to short Chinese stocks. But I think this is all like a sideshow compared to the geopolitical tensions that are still seem to be building.
Okay. So, and the North Korean troops fighting with Russia, Chinese troops in Belarus, looking at, who's going to be the nominee here.
Well, yeah, we're going to have our own
Is
political.
November a big deal to you, Mark?
Yes, but I think that the markets are a great anticipatory mechanism. I think that the U.S. election will become much more in focus in the coming weeks. Once we get past the French government getting put into place, I think the next big focus is the U.S., of course. So far, I don't see much of a market reaction, a sustained market reaction to the poor debate at the end of last month. This is what bothers me too, Dale. We're told that we're in the midst of a democracy versus authoritarianism. And I'm not sure I buy into that. But if that's the case, then having a debate before either candidate got the official nomination seems to be like cutting corners. Democracy is just as much about a process as it is about the end goal. And so I'm very disheartened by what's been happening. And I think that democracy sort of got a black eye over these last couple of weeks.
Okay. Let alone January 6th. Almost 4 years ago. So there have been some black eyes, Mark. All we could do is nothing.
Yeah, and as we're talking, Dale, you see the dollar has stabilized. I would still be. I think that this might be a near-term high in the foreign currencies. We get a quieter week next week from economic data. We got the ECB meeting next week, but they're not going to do anything. But perhaps still set the stage for a September cut.
Okay. So, if I know you guys enjoyed hearing Mark today, I always learned something from him, and his work gives me balance with the way my mind wants to run down rabbit holes. Sometimes Mark always straightens me out, and you need to check him out here at Mark to Market, making sense of global capital markets, and his X handle is Mark with a C. Making sense, and you made a lot of sense today, Mark. Nice trade, and it's a teaching moment that when you trade, you're using the trailing stop to lock in the profits that you have. So the worst case scenario is you made money. So thanks for that teachable moment, and I hope that whatever happens, that we are able to guide people away from stepping on landmines. So you help do that by coming here, Mark.
Well, thanks, Dale, and thanks for posting my commentary. I like to, what I always wanted since I began my career is just to participate in the dialogue of the day, and you guys help me do that, so I appreciate that.
Yeah, well, you help by adding important content. So you don't give without getting. You know what I mean? So thanks, Mark. Look forward to talking to you in the fall when we're going to be closer to D-Day. We'll see what happens, but great to be with you on a day and get your big picture view that you think this dollar trend is for real, and just looking for a bit of a correction on this move, but this is a trend that could last for many months. To me, it seems that way. How about you?
Oh yeah, if we're right about this, this is a big end for the dollar's been rallying more or less since the great financial crisis, and that's one of the things I love about foreign exchange, and why I think some of us, Dale, can have gray hair and stay in the business, is that is that there's long-term trends in the foreign exchange market. 5 to 10-year trends are common compared to, say, equity markets or bond markets, which seem to be more tied to the business cycle.
Yeah, it always had the rep of FX of being, and even when it was the IMM, of currencies being the best technical markets. Always had that rep because it trended. Okay, Mark. Well, thanks, buddy. Have a great summer, my trading warrior brother.
Good luck to everybody.
All right, everyone. So that's a wrap. Mark is also recorded if you want to listen to this again, and you could join the team on the Morning Edge in 15 minutes. Remember, don't just count your pips, count your blessings, and we'll see you tomorrow to wrap up with one more inflation number. Adios, everyone. Thanks again, Mark.